Welcome and thank you for joining San Diego Real Estate Talk with Rosita. I am Rosita, your host, realtor, and self-discovery coach. I get to help people find their way home, whether home is a physical home or if home is discovering the core of who you are. Today, I am welcoming back my guest, Paige Sturgeon. Paige is a mortgage broker and planner for Granite Mortgage and has been in business over 20 years. His company motto is, "We are committed to quality customer service, putting the people we serve first." Welcome, Paige.
Hi, Rosita. Thanks for having me. This is good, exciting to talk about our topic today to help first-time home buyers in California.
Amazing. Today, we will unfortunately not be able to see Paige's face because we're having some technical difficulties, but you will hear his voice and he'll provide all sorts of information and get you excited for what we are talking about today, which is California Dreaming, CalHFA's down payment assistance program for buyers. We're going to talk about what CalHFA is. What is its purpose? What benefits does it provide you as a buyer? And Paige will undoubtedly get into some of the products because he just loves what he does. So there's so much passion. So just hang on for the ride. We are going to start with, Paige, could you tell us what CalHFA stands for?
Yes, absolutely. CalHFA stands for the California Housing Finance Agency. And the whole reason of its purpose of being created was affording a home in California is so expensive, right? And so the state came up with an agency to say, hey, how can we help people own homes in California, especially for middle income, lower income families, because they're being priced out. And so the state came up with a bond program where they issue bonds and they sell it to investors, right? And then when the investors buy those bonds for a certain return, they go ahead and then turn this around, that money, and give it as grants to first-time home buyers. A first-time home buyer, by definition, for CalHFA, it means that you have not owned a home in the last 3 years. So if you've owned a home before, you can still use CalHFA, but it had to have been more than 3 years ago, right? So if you owned a home 5 years ago, you still qualify for CalHFA as a first-time home buyer. Isn't that cool?
So the concept of first-time home buyer means you've never owned a home. So to be able to say, no, that just means you haven't owned a home in 3 years. So that is a great fact to know. Also, Paige, so this is only for California. No other state has this, correct?
They might. I don't know because I only can lend in California. Other states might have state programs, to be honest with you. And I don't know because there's so many different programs and there's so many different states, right? But for sure in California, this is the only state bonded program I know other than CalVet, which is for veterans, okay, or VA. That offers grants to help first-time home buyers to own a home, okay? But other states might have some similar things. I'm not sure. I can't speak on that. And there's also local community ones too, like San Diego Housing Commissions offer grants. But again, those are usually for very low in certain zip codes and certain neighborhoods, which I can't even do because the city, San Diego Housing Commission, you have to be, I think they only have 1 or 2 lenders that can do it. They don't allow a lot of brokers or lenders to do it. They limit it to 1 or 2. But this one for sure, the state of California one's definitely more broader in helping other people because the limitations and the rules are way more liberal and all encompassing for a lot more people. Where the city, not as bad, the San Diego Housing Commission, it's more limited. You have to be lower income, can buy in certain lower economic areas and yada, 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 right? So which is good too. We need those type of grants. But today we're talking about the state's grant program that could be done anywhere in the state of California. All the counties participate in it. The difference between the different counties, though, is each county has different income limits to qualify for the grants for CalHFA. Like, for example, San Diego, their income limit's $231,000, okay, which is huge. That means all borrowers on the loan have to earn under $231,000, okay? So that's amazing because there's a lot of buyers that don't make $231,000, right? So that opens this funnel up way more people, right? Before, because we talked about this off the air, is I'd say, 4 or 5 years ago, even 3, the income limits were way lower. And so what happened was you had to have all this money that was sitting aside for first-time home buyers in California to own, and the money wasn't being used because it was too restrictive. So now they've opened this up by making these income limits more reasonable for the prices that are out there. And there are also sales price limits too, which they've increased tremendously as well. So in San Diego County, for example, you could buy a home over $1 million, just over, and still use the grants, which is amazing. Where before they would limit it to very lower sales prices, right? So now this funnel of first-time home buyers that didn't have opportunities for these grants for down payment and for closing costs, now they can use them and actually qualify for them. So it's huge, Rosita.
So the purpose is essentially to really help California residents get into a home, and the income max that they can make is $231,000, whether that's one person or two people. Can more than two people be on this loan? Just curious.
Yeah, you can have cosigners. Sometimes parents cosign, right? Sometimes family cosigns. But the maximum income limit for all borrowers on loan in San Diego now, this is San Diego County, because every county's got different ones, right? Because San Diego's different because it's a high-cost county, but it's $231,000, right? So in other counties, let's say like in Central California, where there are rural communities and all that, the median income level is a lot less, and maybe it could be $125,000, for example, right? So depending on what county that you want to buy, and I can help you go to the website and figure out, okay, as long as we earn under this threshold right here, you qualify, right? You have to be a first-time home buyer, number one, which means you haven't owned in the last 3 years. Number two, you have to make sure you're within the income limits of that county in California where you're buying. And they have a website that tells you, hey, here's our limit. And then there's a sales price limit as well for the county. So as well, we have to make sure we're within that. But again, they've raised them so high that most first-time home buyers are going to qualify for these grants. So it's huge. It's amazing because most people, what do they have to do? They either have to save, which takes a lot of time to save that kind of money, 3 to 3.5% down most programs, right? And then closing costs are usually another 2 to 3% on top of that. Okay. So then what happens is people have to wait to buy. And that could take years, which is then they're paying rent, right? And their rents are expensive. That rent does nothing for them tax-wise. They're not building equity. So that's why as soon as you can qualify and afford a home, the better.
So basically the benefits for CalHFA loans is that you can get a grant for the down payment as well as the closing costs. But when you say grant, those are just more a silent second and third loan, which the buyers do not pay on at all until they refi or sell their home, correct?
Correct. So these grants that the state of California is going to give you is they are considered what we call silent seconds or silent third. Because if you have two different grants, then the one for down payment would be in second position, the one for closing costs would be in third position. So those grants are actually silent, which means there's no monthly payments. The only time that you would pay those grants back is if you refinance into a different loan, okay, or sold the property. You would pay them back. The down payment assistance grant called the ZIP loan is there's no interest that's charged on it. You just pay whatever that grant was. Let's say it's $20,000, and 5 years later you sell the place, you just pay $20,000 back to CalHFA. The one for down payment, which is called My Home Assistance, there's actually a 1%. They charge you 1% simple interest on the loan. So if it was 5 years, after 5 years, and again you borrowed, let's say $30,000 for the down payment, you'd pay $30,000 plus the 1% over those 5 years back to the state of California. So it's really basically free money in a sense, even though you're paying 1%. I mean, that's pretty minuscule, the amount of interest that you'll pay. Okay. But the amount of appreciation, hopefully, that you'll have in those 5 years, I mean, it could be 50,000, could be 60,000, could be 100,000, right? So, and then the tax benefits of owning and the equity appreciation. I mean, it makes a lot of sense if you can afford to purchase and it's in your comfort zone and you can qualify. It makes way more sense to own than rent, because rents aren't coming down anytime soon and they don't help you in any way as far as tax benefits. You can't write off the interest. It's basically helping your landlord. It's future, not yours. So we try to coach and get people ready to own a home as soon as possible and not delay and wait, because these grants will help take that out of the equation.
The other thing is, of course, that there are still the FICO score has to meet the requirement as well as the debt to income. So all that comes
That's
in.
right. Yeah, it's like a standard loan. We're still going to pull your credit score, right? You have to have good credit. The higher the credit score, the more you're going to qualify for. CalHFA, the lower the credit score, then that means they limit what you can borrow, right? So if you have like over a 700 score, they'll go to 50% debt ratio. If your score goes below 700, then they'll go to 45% debt ratio, right? They won't let you borrow as much because your score's lower. So you have to have actually decent credit. It doesn't have to be perfect. It has to be decent. Okay. And if not, we'll get you there and I'll help coach you to raise your credit score. We do it all the time, right? And then you have to qualify. You have to have a good job, right? Or if it's a newer job, if you just graduated from college and you have a degree, but then you just got hired by, let's say you're a nurse, right? You went to nursing school and you have your school transcripts. We have your nursing diploma and you've been on your job a week, but you have that education background and the degree, we'll count it right away. Okay. So there's always exceptions to people think, oh, I have to be in my job or this industry 2 years. No, that's not true. There's always exceptions to that. And that's why, when I meet with people, I put the game plan together and go, hey, here's the weakness, here's the strengths, here's the rules, here's what we need to do to get you ready. Now, you might have to wait 2 months, 3 months until you've been on this job or paid this down or saved this amount of money, whatever it is. But if we work together and when I meet with people for the first time, we kind of look at all those pieces of the puzzle. And then we put them together and see how quick we can do it, because most people would like to own as opposed to waiting. And so we put them on a plan to make sure if they're not ready, we'll get them ready.
So the other thing is, back in the day, CalHFA was looked at as a very low income product. And you couldn't
Yep.
get a loan for over, let's say, 500,000. I believe that's changed now, right? This loan program has higher maximum amounts for purchase price, correct?
Yeah, that's correct. So what they used to do is they used to limit it by loan amount. They used to limit it by the income limits, and they were really conservative and low. So what would happen is I got a lot of calls and a lot of emails about, hey, heard about this CalHFA grant program through the state, California. How can I use it to purchase? And then what I do is, I don't know, there was a large percentage of them where I go, oh, you don't qualify because you make too much money, right? Or, oh, you don't qualify because their sales price limit is X. And so you can't buy that house, And so it would really limit the amount of borrowers I can help, the first time home buyers that I could help, because a lot of them were like in lower price ranges, like condos, right? For example, or they're single parents, not anything against that, but because you had two incomes, you'd be over the income cap a lot of times, right? So now the state's like, hey, we actually want all this money that we have available, and we're being way too conservative on who can use it. So now they open the floodgates by raising these income limits and sales price limits to reality, to the current market conditions, right? Where before it wasn't. So they would say, oh, I have this really good program, but it wasn't helping as many people as it could have. Does that make sense? They've gotten a lot more wiser in making those limitations by taking them away and bringing it to current market conditions, because it's a lot more expensive to own a home and the loans are bigger. So in order to open that up to many more first-time home buyers, they've changed it, which is a good thing. So now I can help way more people and not have to wait to buy now. So that's why I say it's a good time to check in to see where you're at, get what I call financial maintenance, right? Just say, hey, here's where we're at. Here's our credit. Here's our income. Here's our bills. Here's how much we have in the bank. What can we qualify for? Where we're at? How much does it cost to buy an $800,000 house in Santee, or wherever it is, right? And we have those conversations because then they can learn. And when you learn and have knowledge of where you're at, then you can put a game plan together to figure out how you can get to that goal of actually owning. And so that's what I do every day. I love doing it, coaching and counseling people, achieving their goal of home ownership.
So what is the max loan amount that can be bought with this loan product?
Well, see, again, it's county driven. So it's a little goofy because it's based on the county, but in San Diego, because that's where you and I live and do a lot of business, but we could do anywhere in California. In San Diego, the maximum loan amount's $1,006,000. So just over $1 million on a loan where you can put a small down payment and use these CalHFA grants, which is amazing because the average home now, I don't even know, Rosita in San Diego, what is it, 750, 800? I mean, it's crazy, right? So this is realistic because CalHFA says, hey, our limits are way up there, so you can actually use it to own a home and not just a condo or a townhome, right? So in San Diego, definitely. And then in other counties too, they've raised those limits so high. So it's going to encompass way more people that it can actually benefit from this program as opposed to before it was limited. So I'm really excited about that part, that they actually changed their rules and guidelines to make it more available to way more first-time home buyers instead of them, hey, we have this great program, but we half the money we didn't use. You know what I mean? So now there's way more money available that can help way more people because there's a lot of need for this in order to own a home in California. It's not cheap. So this is a huge resource that's available for Californians to use and take advantage. So it's based by county. So like Los Angeles County, San Diego County, Imperial County, Riverside County, San Bernardino County, all those different counties throughout California has different median income limits, and then different loan limits, right? And so depending on the county you're in, I would go do the research and say, okay, here's our thresholds for income that you can make. Here's our threshold for sales price. And then can you qualify, up to that high? And if you need to go above it, then maybe this isn't the program, but there's other programs that we could help. So that's okay. But that's my job, is kind of figure out, do an analysis where you're at. So then I can coach you and tell you, like, here's what you do. Here are your next steps.
Yes. And I just wanted to share a real story, real experience with this CalHFA loan product, as well as with Paige, because I have a sister who was looking to buy a home. She had been renting, the rent kept increasing and increasing, and she was just tired of it. I recommended her to talk to Paige, and she found out about the CalHFA program. She had to take care of some things and get ready, get some monies prepared, pay off some debt so that she would have a higher FICO score. She ended up buying a 3-bedroom, 2.5 bath townhome, I think low 400,000. And here we are. She's already gained $100,000 in equity. She's paid off the second and third loan for the down payment assistance, as well as the closing cost assistance. And she can breathe easy because she doesn't have to worry about the rent increasing and increasing. And Paige was super knowledgeable, great coach, and helped her along the way. I think it took a year before she actually decided that she was comfortable to make that jump and buy a home. So I want to thank you, Paige. I want to tell you all that the CalHFA program is absolutely real. And I wouldn't have put my sister in the program and recommended her to Paige if it was not a safe way to go.
Exactly. And it was really good because when I first met her, I mean, she was pretty limited because she didn't have a lot of savings saved up to do it. And so she wanted to know her options. And then once I said, hey, this is an option, this California grant from the state of California called CalHFA, and you qualify based on your income and based on the sales price limit that you wanted to buy at the time. Yeah, you in the county, because she wasn't in San Diego, right? So I did all that research and said, yeah, you can do it. And so what we had to do, because she had some debt, I said, well, let's go ahead. The money that you do have, let's pay down some bills for 2 reasons. One, to increase her credit score so she'd get a better rate. And the other reason is it would give her more of a loan amount and sales price that she could qualify for in the area she wanted and in the sales price she wanted. So it took her a little bit of time to do it. And I think it just a little under a year. And then when she did all those things that we did working together, get her credit score up and her debt ratio in line, then we were able to, Rosita was like, okay, let's go shopping, right? Because we had the money in place. We got her pre-approved. We had the grants in place. We had our first loan in place. And then the fun part was, okay, I got the money. Now I got to go see what that's going to get me out there, right? And Rosita was able to negotiate a really good price on a place, and it was within her budget. It closed. And yeah, I think it was like 3 years ago, maybe 4 now. But yeah, it was a really happy story because she thought she was never going to be able to own a home because she's all, Paige, it's going to take me 5, 7, 6, 8, 10 years to save up down payment, closing costs, because I'm just getting by. And then, once we put her on a game plan, she had to make some sacrifices probably with her budget, right? But she was committed. And people that are committed and want to achieve a goal, it's fun for me. It's like, we can do this. I'm like in their corner. Yes, keep doing it. All right, we paid down those 2 credit cards. That's awesome. Let's go. We got a couple more to go. So, and I'm in your corner with you. And so is Rosita. It's like, okay, we can do this together as a team, right?
Right.
And then there would be times where she would call, she had questions like, hey, what should I do in this situation or that situation? So we keep in contact. I don't pressure you. It's not high pressure sales. I'm not going to bug you every week. You're going to check in as you need to for advice or give me, updates, right? So we keep in contact. And yeah, hers was an awesome success story. And every time I talk to her, she's always like, I can't believe we did it, Paige. Thank you so much. I'm so happy. I don't know. That's the rewarding part of our job, Rosita, that we love. We love to help people and make the dream of owning a home a reality. And CalHFA is just another resource and tool that can expedite that for a lot of first-time home buyers.
Yes, and I just want to talk a little bit about interest rates because it motivated her that the interest was that low. I think this was pre-COVID. I'm pretty sure it was pre-COVID. She decided to be committed. She did what you suggested for her to do. She got into a place instead of waiting and waiting. Now, has she waited until today? That's a huge difference in payment. I think you were able to get her into the place with a high 3% or 4% loan, where today, if she waited to now and get into a loan product for 6%, that's a difference in payment per month. So
Absolutely. And she probably wouldn't have been able to afford it, to be honest with you. I mean, at the same place today, if she would have waited, right? So things change. We can't control rates. We can't control the economy, right? What we can control is, how we budget, how we save, how we pay our bills, right? We can control some of that. So what I do is I see where you're at, and then I say, okay, here's our strengths, here's our weaknesses, here's what we need to do, right? Here's a couple, or I can say, you're ready. Are you ready to jump? Take that leap of faith, right? Sometimes people are better off than they think. And then the other side of the coin, some people think they're ready and they're not because they haven't saved enough or their credit score is not good enough or they haven't been on their job long enough or whatever those things are. And if you're committed to achieving the goal, I'm committed. So I'll spend the time and whatever time it takes to get you to owning a home if you're committed and want to work at it. That's the awesome thing. And there's been a lot of success stories through the years and with their homes where they bought, this 2-bedroom, 1-bath small condo. And, 30 years later, their kids are growing out of the house and they're retired. And I'm on their 3rd or 4th house, right, with them because life changes and the seasons changes. And I've been able to help plan their future through real estate in their home.
So, Paige, we are at the end of our time. I want to thank you so much for providing knowledge and your wisdom and your coaching regarding just buying a home and these CalHFA loan products. So how can people reach you?
The best way to reach me is through my cell phone number. It's 619-888-7243, 619-888-7243. And you can text me, you can call me anytime, and I'll be happy to speak with you and maybe set a time where we can either meet face to face, eyeball to eyeball, or we can do a Zoom call.
And I'm going to encourage you, if you are just even a little bit thinking about buying a home, please go see Paige and see what your financial picture looks like now. You may be surprised and find out, wow, we can get into a home. Okay, great, let's move forward. Or you may have to have some coaching to prepare you for what kind of home that you want, what price point, what you're looking for. And then work with me and I'll create a list of homes that you're looking for, whether it's a 2-bedroom, 2-bath, or in a certain neighborhood. Then at least you can keep an eye on what the prices are looking like and how much inventory is or is not on the market. But Paige and I work together so that we can bring you an amazing home buying experience, because oftentimes it can be super stressful. So thank you so much for watching. Thank you, Paige, for joining me. I'm Rosita Perez, your host, realtor, and self-discovery coach. I'm here to help you find your way home. When you have questions, please call me at 619-665-9086. So until next time, thank you for joining. I will have our contact information in the comments below. Please call Paige right away to see what your loan limits are in the area that you're in and where you are at in terms of being able to buy a home. Thanks again, and thank you, Paige.
Thank you for having me, Rosita. It's been a pleasure.
Bye.